Hey traders, what's going on? Jamie Setley here. It is, hold on, it is October 2nd, 2019. And before we start, just let me know that you can hear me and see the screen, and we'll dive in. All good, says Peter. All right. So, yesterday's post was fairly comprehensive. And yeah, we hit those levels on Euro. Sound like a broken record, but hoping that was it for the low, or a decent low, maybe the low. We hit huge resistance on DXY. I mean, this chart is simple and beautiful. The divergence on this is striking, right? With just how weak RSI is and has been. I mean, look at all the beautiful touches to like the tick on this thing, save for here. But when we had a big outside bar back here in December of 2014, the market did go parabolic after that. So again, it's not just the touches of the trend line, but what a market does after it breaks a trend line. And in this case, this trend line is really, really important. So if we go back to I think this is the key chart to watch, really. So if we go back to this chart, we bring it in with DXY over here. Nope, wrong stuff. Hold on for a second. This should be it. Yeah. Okay, so here we go. All right, DXY. Got that too. Look at that. That's pretty nuts. I'll have to throw that in there. I forgot that one. But yeah, what I would say is market's topped. We've got all the DeMark indicators flashing, sell signals. We're back under what I would consider an important level at 99.20, being the February 2017 low. And yeah, just looking for this to finally accelerate to the downside. It's a good sign that we had some follow through on the downside today. Again, obviously nothing drastic here, and the real break wouldn't even really happen until all the way down here at 96.50, but that's a lot of room. So from here, your first trend line really to watch, I think, is from June. Okay, so that would be the level to focus on near term. We will go even shorter term when it comes to, and those are the same angle, I think, or pretty close to it. We will go shorter term with Euro here. So one of the charts that I was posting today, in today's update, will be a Euro chart. It's a short-term chart, and it's this one right here. All right, so 60-minute chart. If you go real granular, you can see the 5 up, 1, 2, 3, 4, 5, right? Dumped into Europe, right? 618 essentially on the retrace, just about. Dumped into the European market, and then we turned around. We got triggered, also hit some stops today. It's a weird day. Dollar Swiss, I don't know what the hell is going on there. Dollar CAD just soared all day long. But you can see we're getting close to 2 equal legs, okay? And that's also going to be right here. That's that high from the 26th and the low from the 23rd. So you might face some, some resistance there. I've moved the stop to break even, by the way, on euro at 109.20. Really don't, week opens 109.42, so I don't think we would be, I don't think we would be breaking down below that level if this is for real. At least I wouldn't want to see that. So what we're looking at here is a break. If you break through, this is the slingshot setup too, right? So if you break through this upper channel line and just through the horizontal 109.68 area, which would be two equal legs in this high and low, that to me is a pretty important deal. And I did note yesterday that really the first level to pay attention to, I think, is probably going to be around like 109.27 to 109, or sorry, 110.27 to 110.68. This zone here. You've got the trend line here. You've got the center channel line from the September 2018 high, okay, which was precise resistance back on 913. So that's going to be a level to watch. Both those levels. I have moved the target on half of this to 110. All right. Reason being, and frankly, it's probably stupid. It's probably best to just trail this, but you could see a reaction at 110 because 110.08 is where the rally from here would be relayed by 1618. So just saying, you could have something of, a move up to this. This could be your third wave. Then you could pull back in a fourth, and we'd want to be buyers again there anyway. All right. Then you go for the 110, whatever, maybe 110.60s or something like that. But that's where my head's at with euro. So, pretty clean near-term price action, impulsive on the upside, which is a good sign. And a good sign for for long positions, and that's about it. So with euro now, dollar Swiss, I don't know what happened there. Does anybody have an explanation? I didn't see any like weird news or anything, but clearly dollar Swiss did not trade with a risk-off mentality today. Technically, I thought this was actually the best setup of all the dollar setups yesterday, but didn't work. So really, we're about the same place that we were yesterday. If you look at dollar Swiss here, oh, that's dollar CAD. Dollar Swiss here. So okay, here we go. So we're essentially back to kind of where we were entering this short. I have no idea what happened with this, why we soared today and euro strong and whatnot, but so be it. So I still like dollar Swiss on the short side, but I'm not going to mess with it. Not going back for more pain. I suppose that if you broke below 98.80, that would be a level to maybe put on a short. But then again, I still think that you get bounce in the 97.60s to 97.84 area. But that is dollar Swiss, and it's something that I'm not going to mess with for the time being. All right, British pounds. No change here today. As I noted yesterday, I do like euro a bit better than pound. One reason is, as I said yesterday, you've got euro pound kind of sitting on its 200-day average here, right? So to me, I'd rather be in euro than in a very loose trend line, but I'd rather be in euro than in pound at this level. And look, you do have some longer term support. I mean, if you just look at, say, a weekly chart, right? You could go over here. High here, 2013, resistance here, 2017, around that level. So would prefer to be trading euro from the long side. until this breaks down, and it really hasn't break down. You've got to call this just an uptrend with a pullback at this point. That's not to say the pound cannot, or won't rally. Again, it held up today. Pound being pound, who knows? Maybe we come back for a tag of the 20 of the median line, which in this case is going to be a little lower, about 120, 175. Remember, we were looking for about 120, 180, 120, 197 support. Caveat here is if you break through, essentially call it yesterday's high, but you can see the magenta line here. That is the high volume level from yesterday. That's going to be 123.18, okay? So if you broke above 123.18, then you would have reason to be long and target the essentially mid 124s, excuse me, okay? And that's a very clean level. You've got the parallel here, again, 618. If I zoom into this, say 4-hour chart, this to me does look like a 5 waves down. So unless this completes some sort of a weird flat correction, you actually could have a selling opportunity up here. I don't know, maybe something with Brexit doesn't make a whole lot of sense given the fact that the DXY and the dollar, et cetera, have all these topping characteristics in place, but that does not matter in terms of looking at the individual chart, right? You want to look at the individual chart for what it is, and in this case, this would be an area to think about shorts. So let's see what happens when we get up there. You got to see first, and if you start to turn from it, then great, and then we'll check it out. But just be aware of the levels at this point. I do suppose, again, as I mentioned, you could get a spike down here. It's possible that this is all a 4, right? And you could dump down here and then go higher. So those are kind of the 2 levels I'm thinking of: down here, up here, and if you get back above 2320 or so, think about longs into this area. All right. Okay. So that pretty much covers it for Europe. Dollar yen. Love that chart from yesterday. This one here. This is a useful exercise, actually. So what I'm talking about is if you extend your trend line. So we'll just throw this up here. 1 second here. All right. Okay. So daily trend line, or daily, excuse me, chart, and trend line back to Brexit, right? We all remember this. All remember this. What this is just the trend line from here, right? 521 to 81, right? It was resistance on 918. It was resistance yesterday after a quick spike above it, and you got this, the strong reversal. This trend line takes on more weight, in my opinion, after I see something like this and see how many levels it touched, right? So all these highs up here, all the way back to November, excuse me, of 2018, earlier this year in March, right? And just as I said with that DXY trend line, the longer term one, it's not just the touches on the trend line like you had support here too. It's what happens when you go through it, right? And we went through it with a gap and then fell apart, and that was in May. So, and again, it was resistance again and again. So for me, this is really important that we've come off. And I have moved the target. I've removed the target. I do think that you could see a bounce between 106.50 and say 106.75. In fact, if we got a bounce near 106.75, which would be the 75 line of the short-term fork, then you'd probably be looking at resistance somewhere on this 25 line, right? Which actually was resistance last night, along with the high volume level at 107.85. All right, so something down here, if you get a bounce, great. The market's kind of sitting on a ledge right now, so if you don't get a bounce, then we could just fall apart. right? So that's why I don't want to lose this position. We will go break even on it because we shouldn't really go back to 108 at this point if this is for real. So just know your levels. As noted in yesterday's piece, I think this could be a flat, right? So if we go back to, if this is the real bearish thing that I think it could be, if we're going back to here, right, which is where the long-term triangle may have ended, what you're looking at then is a 1, 2, 3, 4, 5, okay? And then A, B, C, 1, 2, 3, 4, 5, and C, all right? And that gives you 1, 2, which puts us in a third wave down, all right? Now that's kind of frightening to think about from a risk asset perspective, but I think it is completely possible. What do we have over here? What's that level? 106.27. Okay, so if we have our triangle ending here, A, B, C, D, E, you could be talking about targets down in the mid 90s, all right? Going shorter term, 106, there you go, 106.50s gets us there again. So 106.50s may very well be where we do bounce. Again, I'm just taking here, if that's 1 and this 2 and we're in 3 now, then you can go 106.50s or something like that, get a bounce and a 4 and then go lower again. So that's something that we will be watching for as well, but the levels all make a lot of sense, okay? All right, that is dollar yen. Now, what I am having a tough time kind of wrapping my head around, I guess, is the commodity currency situation. So Kiwi and Aussie were actually relatively firm today. Kiwi was firm, Aussie was flat, and dollar CAD was through the roof. So if we look at the New Zealand dollar, remember our long-term chart here, right? Okay, trend lines from 2000 and 2001, and zooming in, and nailed it. Nailed that support. Kind of tough for me to want to be long against this. Like chart-wise, I love it, right? It's just really tough for me to wrap my head around being long like a commodity currency when everything is falling completely out of bed. You know, go to just a 240-minute chart. Look, if you get a move above this trend line or something, then maybe there's something to work with at that point. I will put it kind of on a pending long list at this point. Would like to see an established, kind of move as well above that trend line, but kind of above that 62.80 area, right? Also possible that you go 1, 2, 3, this is a little 4, and you revisit the lows. So still up in the air on this, but longer term, certainly a support. It's hard to say that you're not after we've reacted to that level, but it does seem like euro and yen are the way to go with this dollar move right now. Aussie dollar, I don't have much of an opinion on this chart at being at new lows right now. However, I will say that we did get this is an Aussie dollar, it's a 1.5 volume. 1.5 volume reversal day. You've had some in the past that have done okay, but overall not really. You'd had one you can see back here at the 2016 low, but you've had a lot of false ones on this, so not so sure if this is worth even presenting, but I will show you because it's, it's the stuff that I look at. better track record, it seems like, back in the day as far as the buy signals are concerned. 04, 07, right? 2010, both 2010s. Back here, 2011, false signal, but then a good one back here in 2011. So if we follow through on today's strength, then I will say, you know, why not? Might take a shot. But for now, got to let it prove it a little bit. But it is interesting to note that we got that that volume reversal signal. And again, that's the 2-day volume reversal signal, where what I'm looking for is heavy volume into a price extreme, at least a 50-day high or low, and then the next move is in the exact opposite direction, also on heavy volume. Obviously, the more volume, the better the signal tends to be. Okay, it's going to be more rare. It's just going to be more important. That's all there is to it. Dollar CAD, huge volume down day, or CAD, I should say, huge volume down day. Dollar CAD up day. All right, let's go to that. Dollar CAD was really thrown for a loop here. I thought we had a solid trade idea yesterday with this. Just because it didn't work also doesn't mean it was a bad idea. It's a loser. So from here, I would watch actually 133.39 right here. All right, that is daily reversal resistance. That's the close from right here on 9.3. If you turn down from there, maybe something to work with. Otherwise, I suppose you could make a run up here. I don't have, excuse me, don't have a strong opinion on trading dollar CAD right here after today's move. You know, all these days you couldn't close above the 618, and then yesterday the 618 to the tick was the high. Loved the setup, left a short on the high volume spot, and then it just got destroyed, right? Dollar CAD took out the previous 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 days, it looks like. What is that? 32 of basically 13 days, all right? Let's see if we can do a little code for that and see. Oops. See, the last time we had anything like this as far as taking out, technically it's 12 on this because it missed it by 1/10 of a pip. But I want to see if I can put in something here. Hold on. Custom paint bar. All right, high equals highest high, 12, and low equals lowest, low, 12. Okay. Well, you had one over here in November 2010, and that was pretty close to exhaustion. You had a high 2 days later. Let's see if we got anything else. Looks like that's it. So doesn't happen a lot. It's twice. Either way, we'll pay attention to 33.39 as mentioned. If you get through there, I suppose you're going for this trend line up here off the 2018, December 2018 high, excuse me, which connects the line off of the May 31st high. All right, for currencies, that's pretty much it. I want to spend some time here on the S&P though, because clearly there's a lot going on. All right. So we ended the day right at support, like right at support, okay? This was the chart from last night. We didn't have the labels in there, but we ended right at support, like 2018 high, or I say January 2018 high. daily reversal is 28.80, 50, right? So pretty much nailed the support there. What's going on though near term? This is support, so the way I'm treating this is that we're in a downtrend, and really the chart that I think was most important yesterday in terms of equities was this one. So we had that second volume thrust to the downside in the 4-hour, and that was kind of your indication, I think, that this was a downtrend, right? Like the risk to the downtrend scenario was that this was going to be a false break, or sorry, a bear trap, right? Because we rallied right away. Well, that move yesterday got rid of that possibility, or I shouldn't say got rid of it, but it greatly reduced it, and sure enough, that was the right move. However, what about now? I say we're in a downtrend, and you be short or short rallies, right? It's possible that we completed wave 3 today, okay? In fact, the move down from here to here is just about 1618. What's it be, 2869. So maybe you get a little something overnight, I don't know, but we're in the ballpark for maybe the end of a little third wave. If you got a bounce from here, the place I would look for resistance would be 29.1950, okay? It is the 25 line within this channel, right? With support back there. And by the way, you got to look closely, but it was super minor support overnight. That's essentially European hours, and then we bounced kind of into the US Open, and then we fell apart. So if you get back there, former support, watch for resistance. And again, this is also 38.2 of this move down. We don't know at this point if this is a low or not. I'm just saying if you do bounce or continue to bounce or consolidate, we bounced today, then I would look for resistance at that spot. And your next spot down is probably around 28.25. You can see it better if I scroll out on this, because 28.25 is over here, okay? That was actually resistance in October of last year. And you can kind of see it's, it's not perfect, but close to some resistance back here in March. You get the idea. And really what it is, it's just a line off the June and August lows, okay? So at that point, maybe you get a low, and then maybe you bounce back up here and test former support as resistance, okay? All right, so that's my deal with S&P futures. Give me a second. All right, let's look at SPY and QQQ, and then we can go through some of the scans. That's my favorite part of the day. All right, so SPY, guess what? Today's low is 286.64, and guess what the January 2018 high is? 286.63. So interesting there that you got immediate reaction off of that. And by the way, that level was also support back here in September of last year. The similarities between this year, or at least the beginning of the fourth quarter now, and last year are pretty crazy. You've got the high last year on 920, the high this year on 919, at least in SPY, 913 in most things. And we broke this level. This could be a breakaway gap. That's kind of what I'm thinking, at least. But still, again, not necessarily out of the woods. There's two levels to pay attention to on the downside for SPY. Again, I'm going to follow the futures, you know, obviously overnight and into tomorrow, and I'll trade maybe SPY options with it. But what I'm trying to get at here is that you can see the volume levels on SPY a little more than maybe you can see the volume levels on futures, because this is going to be just US, right? So if I'm going to put in my high volume indicator here real quick. All right. $20 we want $50. All right. So you can see the close down here, right, from August 5th. That's the highest volume that we've had over the last 50 days. So that's a level at which I'd kind of pay attention to, because it's also the 200-day average, right? You take that out, you have a possible median line structure here. And if you bounce off there, that'd be awesome, because we'd have something really cool to work with moving forward. Otherwise, I would say just kind of look lower and understand levels at which you may bounce. That's how I am getting at this. Sorry, check something out. All right. Okay. So bottom line, S&P futures focus on the two levels noted. So 29, 1950 if we bounce, and next level down, which could complete 5 waves down, to be 28, 24 and a quarter. All right, what about the Qs? Qs are actually on a fib level, pretty good level too. So if you take the entire retracements, right, the retracements from December, from Christmas Eve, right, you're at the 23.6 right now. And that's a pretty good spot. You can see high back here in July of last year. Same level was resistance in March. Just cuts through a lot of stuff here. Now you have broken this trend line already. All right, the trend line is quite different in S&Ps. So we have broken a trend line, and you know, you just have to say that you could indeed bounce here. That's why the cleanest chart to me is those S&P futures. That's what I'm following the closest. But if we zoom in, if this was the 5 down, right, and this was your bounce, and we're in a third wave now, then you get your next real big fib cluster is not until 175.65 to 176. That's a big level, okay? Because that is also the high from March of 2018. It's the high here from November of 2018. It was resistance back here. And oops, why did I move that? And that would be your next kind of big spot, in my opinion, to pay attention to. $200-day average is right on the low, but the fibs say that this is probably more important. We're going to get rid of that, and we're going to put this on here. All right. So again, best way to go about the indices, in my opinion, is just you're down, right? We're bearish, but no levels at which you could bounce. That's all, right? Like be core short, sell rallies, no resistance levels, and no levels at which you could kind of flush into and have some panic, near-term panic lows or something. All right. And that's pretty much it for me. Went through the the gold and silver charts yesterday. I would note here that I'd kind of be aware of silver resistance near about like 1790, right? Up here, call it 1788 is near-term resistance. Obviously, if you make a 5 up here, that would be ideal because you then have the idea that this low is fairly important. We don't know that yet. Gold. Again, good sign that you came through the neckline. That increases the likelihood of this being a failed head and shoulders. If you pull back from here, I said 15.13 yesterday, we got like 15.11.50 today. If you pull back from here, 14.95 is probably the level to know for support. As for crude, it's just a disaster. I mean, so I'd watch these parallels. This is just a channel back from April, okay? The April high, 51.85 might be support. If you get a bounce at all, I think you'd probably have to say that your median line is resistance now. I mean, we did screw around there and kind of consolidate and try to rally off that level last week, but then you can see what happened once we went through it, right? Selling accelerated. So at this point, again, 51.85 maybe. If you're lucky for a bounce, 55.30. Otherwise, I think you have to look to the bottom of this channel, and the next level does have this trend line from 16, right, and the December lows, and that's going to be down here at 48.40. So may still have some pain left, barring a bounce in crude oil. Okay. All right. So I'm going to wrap it up. I got to get going. Are there any questions that you guys would like answered before we do go? Nope, nope, nope. All right. Then I'm going to wrap it up here. I'm going to get this archived for you. I will have it archived this time on time. Last week was tough. I had some serious computer problems, but I was able to get it up the next day. And thank you all so much, as always. It's a fun October already. All right. Talk to you guys later. Have a great rest of your week.